Welcome to today's Money Board. We talked a lot about planning, again, as we do on every single show. And life changes, perspective changes, and you put your head down, you do your thing, you save your money, and all of a sudden you wake up and you go, geez, we've accumulated quite a bit. So I want to talk today about a wealth transfer. This is a tax strategy. It's something that we find pertains to maybe a certain demographic, maybe more than other, but it doesn't matter. I mean, you could be outside of this category, but who needs wealth transfer? And I'll explain what that is here in a second. But farmers, and I'll give an example here. A lot of times farmers have maybe millions and millions of dollars worth of land, but maybe they don't have as much equal amount of capital. So how do they keep that farmland in the family without having to sell the land to pay the taxes? Okay, so wealth transfer, especially from one generation to the next, and we see mainly this comes into play with federal estate taxes, okay, which are a big topic right now in the tax law change potentials. Okay, doctors, what we see here is millions of dollars accumulated inside of qualified retirement accounts, and those dollars are going to be taxed to that next generation, right? And so the options that they have for the distribution to their children with the inherited IRA being gone are much different today. And the third is business owners. You have a business. How do you keep it in the family? And most of the time, the majority of one's wealth is tied up in the valuation of the business, okay? So whether you're an individual, a farmer, a doctor, or a business owner, we can help you with this strategy when it comes to planning. So let's take a look at an individual, 55 to age 60. They have a $5 million asset. We'll just say it's an IRA, for example, or qualified money, 401k, IRA, pension, whatever. And highly taxed, meaning ordinary income or federal estate tax, okay? At death, the asset transfers will assume one beneficiary. When you take a look at how this will all play out, you've got Uncle Sam getting $2.1 million in that case, or roughly 42% of that asset. So if that was not a liquid asset and you didn't have $2.1 million, how would you pay that tax bill? Okay, that's where it comes into play with farmers. In this case, we're saying it's an IRA, so the asset is reduced from $5 million down to $2.9 million. So how does this work? We take the highly taxed asset, we pull off roughly just say 1%. We pull 1%. So if you're getting a return on the asset of, say, 5 or 6, we take 1%, we make a gift of that, 34 to 67,000 in this range I've given, into a trust called an ILIT. That trust then pays tax-free proceeds back to the beneficiary of the estate to pay the $2.1 million, and our beneficiary is left whole, inheriting the entire $5 million and not seeing any erosion of your estate. I've mentioned this before. A comprehensive tax plan includes income, healthcare, tax, and we're talking about estate planning here. You need a plan. You can get it with us. It's just easy, so easy. We made it easy. Just call me, 800-878-6223, or you can visit me online for more resources and to schedule your appointment, wasmithfinancial.com.